Apple just lost $118 billion in market value. And it happened right after the launch of the brand new iPhone 17. That's more than the entire value of companies like Starbucks or Nike. Gone in just a few days. So what exactly happened here? Did people simply not like the new iPhone? Or is this just Wall Street being, well, Wall Street? In today's video, we're breaking down Apple's recent stock drop. We'll look at the numbers. We'll explore why investors reacted the way they did. And most importantly, what this means for the future of Apple. On September 9th, the day Apple unveiled the iPhone 17, Apple's stock closed at $234.35 per share. Fast forward to now, and it's sitting around $226.79. That might not sound huge, but when you multiply it by Apple's nearly 16 billion shares, that's a $118 billion market cap loss. To put that into perspective, that's more than the annual GDP of some countries. And it all happened in less than a week. Now, why would a company as powerful as Apple lose this much so quickly? Let's break it down into three possible reasons. First, consumer reaction. Early reviews of the iPhone 17 have been, let's say, lukewarm. Many people are saying, it looks the same as the iPhone 16. The changes are too minor. And honestly, that's a fair point. The average buyer doesn't notice a new chip or slightly better camera. What they want is something bold, something that feels new. And this year, Apple might not have delivered that wow factor. Second, investor expectations. Wall Street isn't just reacting to the phone itself. It's reacting to Apple's growth story. For years, every iPhone launch was a blockbuster event. Sales jumped, revenue spiked, and the stock followed. But now, the global smartphone market is slowing down. Most people already have a good phone. And upgrades are happening less often. Investors worry that Apple's best growth days might be behind it. Third, the bigger picture. Apple isn't just about iPhones anymore. It's about services, iCloud, Apple Music, App Store, Apple TV+. It's about wearables, AirPods, Apple Watch, Vision Pro. But the iPhone still makes up nearly half of Apple's revenue. So when the iPhone underwhelms, everything else feels shaky too. That's why the stock market punished Apple so harshly. But here's the real question. Is this just an overreaction? Historically, Apple stock often dips right after new iPhone launches. Investors buy the rumor and then sell the news. But usually those dips don't last forever. Once sales numbers come in, the stock tends to stabilize. So this $118 billion drop might look scary, but it could also be temporary. In the long run, Apple's power is still unmatched. They have over 2 billion active devices worldwide. Their ecosystem is a golden cage. Once you're in, it's hard to leave. Services revenue is growing consistently year after year. And Apple is sitting on nearly $60 billion in cash reserves. So no, Apple isn't going bankrupt anytime soon. If you're an Apple fan, this doesn't mean the iPhone is dead. It just means the market wanted more. If you're an investor, this dip could be an opportunity. Apple has weathered far bigger storms before. Remember when people thought the iPhone X was a flop? Or when everyone said the iPhone 12 was boring. The stock always bounced back. The real test will come in the holiday season sales numbers. So why did Apple lose $118 billion in value? Because the iPhone 17 didn't blow people away. Because Wall Street's expectations are sky high. And because in the short term the stock market can be brutal, but in the long term, Apple still remains one of the most powerful companies on the planet. What do you think? Is the iPhone 17 truly disappointing? Or is this just another case of unrealistic expectations? Let me know your thoughts in the comments below. And if you found this breakdown helpful, hit that like button. Subscribe for more business and tech insights. And don't forget to turn on the bell so you don't miss future updates. Thanks for watching, and I'll see you in the next one.